The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. I'm going to start out the show here with the foreign exchange. We're going to start with the euro. In fact, we'll just stay with the euro for just a little bit. But this happened 5 minutes before the jobs report came out. So there was something really dramatic happening in the currencies because the pound, the euro, Japanese yen were all jumping around a great deal right before the report, a couple minutes before the report. And as you can see, on this chart that we have here for the euro, that we went perfect ABCD pattern right up to the the 50% retracement, and then it broke $1,200 in a matter of a couple of minutes. It didn't take more than 5 minutes for that whole break to occur. So somebody must have leaked the report, if that's possible. Gee, that would really be a surprise to me. What I'd like to do today, we've got Friday, so the day following Friday will be Saturday, then we have Sunday, and then we have Monday. We've had a down week, and what I'd like to do is to try to review where we stand with some of these things and where we might be going. And, this is just a assumption on my part looking at technical analysis. But before we get into that, I wanted to talk a little bit about the gold market because we've been a series since the 24th. Well, it's actually been way back in early July. We've been making lower lows, but we had a pretty good bounce back in on the 24th. We rallied $30 an ounce. But if you've noticed, ever since that time, in the last 2 weeks, all of the highs have been lower, just about every single one of them. We made a really nice Gartley pattern this morning up around the 1095 level. We broke $14 after the report. So this is still heading down, folks. There's no other way to gauge it, because you've got these lower tops telling you that you're heading lower. The next level that we would be possibly looking at here in the gold would be down around the 1065 level if it gets to that. We've been here for 2 weeks now without breaking into new ground. Whether we're going to have a situation where we are going to rally or not, I'm not really sure. But I do feel really strongly about this, and that is the fact that we have so many people that are short this thing in the hedge fund business, and also some of these large funds that we have, that this is telling you that we're pretty much looking at something that's going to be a pretty dramatic short covering rally in gold and silver. Silver is still acting weaker, but that's in conjunction with everything else that we're looking at. We'll have to be able to see. And then we'll see what's going on. The question that we have is, are the markets manipulated? I don't really believe they are. They might be manipulated for short periods of time, but long periods of time, I have to believe that it goes down to cycles, and that's what my whole premise is. I might be wrong, but I'll go to my grave thinking it, and have to believe it, because I just look at the technical picture of what's going up and down, and that's really what I'm trying to do. So we need to watch this gold, because we're probably going to make another lower low here very shortly. The next price objective, of course, is 1065. That's on the larger ABCD. Silver is trading around just under 1060 right now. So let's try that again. Just under 1460. So we would probably, think it could probably get down to test that old low at 1410. Okay, now what I'd like to do is to just go over, what we're looking at here in the markets, folks. We've had a situation here where the markets have been dropping for quite some time. Now that we're starting to see earnings come out, and the earnings are justifying some of the things that we're seeing technically, in my opinion. I mean, look at Disney. It had Disney's down over 20% in 2 days. I mean, that's the flagship of the Dow Jones, for heaven's sakes. Something's wrong. But if we look at commodity prices are telling us it's down at the area of the just been going down for, the last month has been a bloodbath, but it's been going down for 18 months. If we look at the Dow Jones Transportation Index, which is, one of the big things that people don't always look at it, but we're going to take a look at it here, and we're going to see that, the Dow Jones Transportation has been going down for well over 7 months. And in fact, it's been well over 7 months, and you'll notice that we are still heading down in the Dow Jones Transportation. That basically is telling us that the market is they're not shipping the products that they're supposed to be making. So you got commodity prices going down, means they're not buying the stuff because of lack of demand, is my opinion, and they're not shipping the stuff because they're not making as many as they were before. I don't know, but where we sit right now is we're setting at the this is only yesterday was the second day down in the move that we're looking at here. I don't know where it's going to end. I have an assumption that we're going to have some type of bottom, if not a minor one, sometime around the 16th of the 13th of August. But and remember, the full moon comes in on the new moon comes in on the 13th, which is next Thursday. So we'll see if this is going to have any effect for a shorter term cycle, and we'll just look and see here. Where we see is the New York Stock Exchange Index. As you can see, we've had nothing but lower highs ever since May 19th. And they all occurred on either a new moon or a full moon. So why wouldn't we expect the next bottom to occur? And remember, this is only the third. This will be the third day down if it's a down day. And the last time we had one of these, it had an 8-day down move, and that would take us into the end of next week. So that's the possibility, that we're looking at from a technical basis. Also, remember, this is all technical mumbo jumbo. It's those bar charts with those little lines on them. And I've always believed, ever since 1974, well, I didn't believe it until 75. It took me a year to learn it. But the sum total of all the buying and selling is on that bar chart. They can lie to you, they can cheat you, they can give you misinformation, they can do all the things that they want to you in the markets, but they can't hide from you. If prices are going up, there are more buyers. If prices are going down, there are more sellers. Okay, now we come into a situation where we've had the best 3 days of the month, were the last 2 days of July, the first 3 days of August, and we topped on the 4th, which was the third day. And now what we're looking at is those positive days are now gone, and now we're going to be closing, unless the market makes some type of a spectacular upside today, which is possible, I guess. But if we close down today, you're going to be looking at people that are fund managers and people that are hedge fund managers, and they're going to be reviewing all of their data, over the weekend, and they're going to look up and realize that we've made new lows on the year in the Dow Jones. We got the transportation going down, we got the utilities going down, we've got some of the major stocks that literally were etched in gold, like Disney and a few others, that are starting to break a little bit. And the media stocks, look what happened to those. I mean, they're going one after another. They're hammering these. So this is not usually a good situation coming into the weekend. So when you come in on Monday, it's going to be an interesting phenomenon of whether we're going to have I don't think we'll see a gap up. We might see a gap down, but the data that they're going to be looking at over the weekend is most probably going to be relatively negative. And so what you want to do is to try to plan your strategy, around this. I was listening to John Logan before. I like to listen to what he has to say on his market profile and some of his guests. And one of the things he mentioned was the core position. And one of the hardest things to do in trading is to have a core position, because your core position might have a huge number, a large profit in it. We happen to be short the NASDAQ for 24/7, and we sold it right on the high. I mean, it was within a couple of points. And yet this market, even though it's broken, 150 points, when you see it rally 30 or 40 points, the one thing that you don't want to do is to follow what your net equity is doing in the middle of the day, because you could see it move thousands of dollars, and yet it doesn't affect your opinion or what's going to happen. Back in the old days, back up until it wasn't until about 10 years ago when we had all that. Well, it was about more than that. About 15 years ago when we had all this internet stuff come up, and we had this instant access, and you can see the actual number of dollars that you're making or losing at any one time. We didn't have that, back in the 70s and 60s, 70s, and 80s. We basically had to look at the end of the day equity. We got an equity run of what we were supposed to be doing, what we had on, and now you have instantaneous access to all this stuff, which in fact is a little bit scary because of all the problems that they have with the internet. And I'm always afraid that they're going to hack into one of the big commodity exchanges or the New York Stock Exchange, but we'll wait and see. That's the one thing that I think that the laws should be written for these people that hacked. Boy, that should really be put on the table as spy related, is what I think, because that could bring an economy down very, very quickly by shutting down the internet without even thinking about it. Now, one of the things that we've mentioned several times in the past, I wanted to bring it up again because it's still relatively relevant, and that is we've still have had record margin debt. And that's the widest spread we've had ever, and that even is wider than the one we had in 1929. And so we have a market in a condition where it is rather vulnerable. And folks, when you can take a stock like Disney and take 20% out of it in 2 days, that's usually not a very good thing. That's just my 2 cents worth. So we'll just wait and see here. We'll be looking at some of these things a little bit later in the day about not the currencies, but the bonds and things. I want to be able to do that. But if you give me 1 second here, my limit minder is going off here in the British pound, and that sort of makes me happy because I'm short just a little bit, and I wanted to check something here. You'll see it made the same pattern here in the British pound that we made in the euro. The pound was much weaker than the euro, but it made the same ABCD structure in the pound that we had in the euro. Give me 1 second here to put the chart up, and you'll take a look at it here, and we'll see. We're just heading down now. We're breaking down below major support. If you remember when we were talking about this earlier in the week, that we had tremendous amounts of resistance up at that 156 area. And we had the lower tops, the 135 pattern. Now we're breaking down, and we're heading down towards the next level of support, which is another 100 pips lower, down around the 154 level. So we'll take a break here. We'll pay a few bills. We'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next segment here is going to be a little bit of a history lesson, and hopefully we'll all learn something from it. This is a chart of the IWM. I posted it into the Tiger TV so you could take a look at it, and I'd like for you to focus on those little red boxes that are there, one in April and another one in June. Now, that's an example of high translation. You'll notice that the market bottomed around the 9th of March. It crested on the right side of that cycle. It bottomed in May, and it crested on the right side of the cycle. That's totally different than what we have going on now. I've shown you how the 7-day rallies occurred in the IWM. And you'll notice that it's pointing down, and the next cycle is not due until early September, which is in the ballpark of what we're looking at for the Bradley model. Also, it has nothing to do with the Bradley model. This is just a nominal cycle. What this is showing you is high translation. In other words, high translation means the cycle crests on the right side of the cycle and suppose the left side. Right now, we're cresting on the left side. You have a 7-day rally, and you're down 10 days. 7-day rally, see what you're going to do the next time. During 1974, well, from the time 1969 through 1974, all I did was I bought those cycle lows. I would buy those 20 or 40-day nominal cycle lows. It was part of the Jim Hurst profit magic of stock transaction timing. There was a firm called Cyclotech, and they gave you these charts with all these numbers of where the cycle should bottom. And boy, for 3 or 4 years, it was the easiest thing in the world. It was like magic. It's just a question how much money you made, because the market was going up, and if you bought the lows, you made a great deal of money. In 1974, that all changed. I can tell you a couple of things here. I remember on July 28th, which happened to be my birthday, in 1974, I was standing in the corner of the Promenade. It was called the Promenade that time in Beverly Hills, which was a huge shopping center. And I was leaning up against my new car with my new Rolex, and I had tears in my eyes because I literally could not buy anything that I wanted. I never wanted a boat or a plane, but I had bought everything that I could possibly wanted. I had 7 figures in my account, and I couldn't, do anything for my mother and father because they had already passed away. My kids were taken care of, and I said, what the hell am I doing all this for? Well, that was my high tick, like Joe Granville was yesterday when I told that story. That was my high tick, because in the next 16 months, I lost it all. I took a lot of money out on the way down, but I went to a minus 2,800. That was in October of 1974. That was the crash of 74. They just literally got me wiped out. How did I lose that much money? It was very simple. If it was a good buy at 50, it was a really good buy at 40. If it was a good buy at 40, it was a really good buy at 30. Now, I was buying the cycle lows. I would buy a 20-day or 10-day cycle low. And what would happen is it would only rally for 4 or 5 days, and then it would be down for 16 days. And that's where the high translation, killed me. That's when I had to study for the next year and a half. That's when I found out about the Gartley patterns, and I already knew the ABCDs, and I knew a little bit about Fibonacci, but I studied the Gartley book quite a bit, and then I finally got back on my feet much later and came back strong. But it was several years before I was ever able to get, back anywhere near where I had been during that time, because I had been so stupid. So don't be stupid with this, folks. These things can go down, and they can go down very, very fast. We dropped 50% from July to actually the actual market topped in May, but the market dropped from May to October. It dropped 50% in 1974. It made a double bottom in October. It made another double bottom in December, and both of those days were multiple conjunction and opposition days, much like we had in 1987 when we had the top. These were major bottoms, astrological. I didn't know this until 10, 12 years later, but that's really what we were what was happening at that time. So we've got some major stuff out here. This is not the time to be too overly confident, and when you stop and think, folks, when they can take 20% out of a stock like Disney, you got to be very, very careful. That's pretty good. Now, Netflix has been really strong, but with nobody moving or going anywhere or buying anything, they're staying home watching TV, I guess. So maybe that's the reasoning behind it. So just be really careful in these areas here, because the markets can sometimes move down a great deal more than you might anticipate. And I think this is a process that we've got going on right now. What happened to Walt Disney is very, very important, folks. That really is important. Apple is doing the same thing. Apple, we had the greatest product in the world, the most advertised product in the world, and it's going down. Something's not right. We'll be right back after these few words.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I was just glancing over my shoulder at CNBC, and I noticed that the headline was, this was the first time the Dow has been down 7 days in a row in 4 years. Boy, that is some kind of statistics, folks. That's really unbelievable. We've had I posted a chart of gold during the break here because we've had a $13 rally in gold since we've been on the air. Folks, this really, be really careful if you're short gold and silver here. They're not acting bearish. I mean, they've been going down, but boy, they come back really fast. I mean, they got lower highs, I see that. They got lower lows, but it keeps snapping back. And with that open interest going higher with more short selling, you've got the largest number of short sellers that we've had in the hedge fund business. forever, going back to 2003 when they first started keeping records. So watch this gold and silver. And in longer term, it's bearish, but you could get a $100 rally here without even batting an eye. Now, I've had a request to take a look at one of the leaders of the pack that we had along here, and that's with the IBB. We've had a breakdown now. We've broken down below the lows of July. As you can see, we had an island reversal pattern here several weeks ago. We rallied right up to the 61% retracement 3 days ago on August the 3rd. And from there, it's just been, on a big move down. But that wide move down with that wide-ranging bar, that tells us we're probably going to get down to the 359 level. We're only $5 away, and that's that's not much for this kind of market to do this. But we've did something here to some longer-term damage, and believe me, this market has had a run like we haven't seen since sugar was. A long time ago. Well, when sugar hit 66 cents back in 1968. Sugar went from 2 cents to 68 cents, one of the biggest bull markets ever. If you'll notice this IBB on the longer term chart, you see we've made that big ABCD on the weekly, and we're now trading about 10% in the first 3 weeks. To the downside. It's been the biggest drop that we've had in percentage-wise since 2014, and this is usually a sign that it's probably getting ready to make a significant correction. The 382 on this move would take you down to the 328 level, and that's where we broke out above our 127. So this market is under some pressure today, but that island reversal that we had was a little bit of a challenge to see what's going on. We almost made a new high on the day in gold. We missed it by about 50 cents. And when you stop and think, when we started this show, we were $14 lower. That's a sign that somebody's nervous. And I am not sure if that's correct or not, but that's usually what that means. It's very, very instrumental to see how some of these things, jump around. It really gets to be a real interesting situation here of what we're looking at. So the next question that someone brought us was the question about the Treasury bonds, and I wanted to bring that up because I think that's going to be the next big trade to the downside. And I want to bring up the notes first because the notes are the weakest, and that's the biggest market of all. That's where you've got to look to see where you are with these things. And if you'll take a look here at the Treasury notes, you'll see that we're still in a downtrend. We've been in a downtrend for a great deal of time, and longer term, this does look like we do want to go lower. We're just finishing a little 7-week rally right here is really what we're doing, and on the longer term basis, this is what we're watching because we've got higher rates coming. It's not a question of if, it's a question of when, and when it does, it's going to be pretty dramatic because the whole world is beginning to look at this thing as getting ready to see something happening really dramatic with interest rates, and we're already seeing this in some of the other things of what we're looking at. So anyway, folks, we have the weekend here is going to be really interesting because we closed really badly in stocks, like I mentioned before. These people that handle other people's money, that have no skin in the game, they look at all their numbers over the weekend just like we do. And when they come in and the market's weak and they see that it's closed below the 200-day moving average for the first time, then you're going to see something dramatic happen. Now we got the Dow down 7 days in a row, biggest since in 4 years. That doesn't mean it can't go 10, 11, or 12 days. It went 10 or 12, 15 days up. Why can't it go that to the downside? So the cycle date that we're looking at here is August the 13th. And that is a minor cycle, but it should be enough to, if we do get down into that area, it could be a bounce. But remember, we've got 4 more days, and we could rally 4 days because we've done a lot of damage here. That doesn't mean the shorts don't get scared again. Every time the shorts seems like they had anything going on here, they turn around and the man with the sickle and the cape is right behind them, chaffing the wheat, and they're standing there, with their equity positions gone. So anyway, that's what we're watching here in these in the Treasury notes. If we go to the Treasury bonds here, we want to take a look here at the bonds. And 1 second here. By the way, I want to hats off to John Logan saying that 280 to 285 level in the S&P was a good sale. It went spot to it. Boy, that's good for you, John. Okay, now we're going to take a look here at the bonds, if I can get them up here. Oh, there, we're going to come up. Here we go. Yeah, here we are. We got the bonds right here, and it only takes me a second to pull these up, and we'll be watching these also. I want to go to a little bit larger time frame here so we can see it just a little bit better. And you'll notice that this is where we are here on a long-term bond chart. We're just a little above the 50% retracement here in bonds. We've been rallying now 1, 2, 3, 4, 5, 6, 7. We've had a 7-week rally in Treasury bonds. And I'm believing the thing that we're going to be, getting very, very close to seeing whether that's going to mean anything or not. But that's what we're watching here, with the Treasury bonds to see if they should be starting to turn down. Most probably within the next few days would be my guess. Maybe over the weekend. I want to take a look at the German Bund because that's the 30-year. German bond that is very, very heavily traded, and as you can see, it is it's much weaker than the U.S. Treasury bonds, and that just means that the U.S. Treasury bonds are yielding more, to foreigners, and so they're willing to buy the U.S. Treasury bond versus the other. But we've completed the ABCD structure. We rallied for 7 weeks. And this market is ready to turn down, so it's one of the things I want to be watching next week, for a potential sale. We have a question in the Tiger Den about the euro. This thing has just been bouncing off the 61% retracements ever since 111. Every one of them has been right up into the wheelhouse of either exactly 61% or exactly 786 within a pip or two, and now we're breaking down, substantially below that 108 level, which tells us that 107.50 is the next stop, and after that 104.50, and then after that we're going to be looking at possible par, and that's been our 100 in the euro, and that's what we're watching. Remember, the euro has monster swings, folks. This thing started trading back in 95 at about 120. It went down to 85 in 2000, right around August of 2000. That's when they first brought out the coins and the paper and stuff, and from there it went from 85 to 160. And that's when the dollar index was down around 75, I believe, and then the euro went from 160 all the way back to the lows. And now what we're doing is I think we're getting ready to handle that par again. So we'll have to wait and see, how this occurs. But this has been a very bearish market. Another question that I've had, I'll try to talk about this again, is about commodity prices, folks. All the commodity prices have been getting hammered. We have a nice 4 or 5 week rally in corn, wheat, and beans, and the market came right back down to where it was before. We've had new lows in iron, copper, steel, all the chemicals, especially petrochemicals, because of the price of oil. The transportation costs have been dropping. The Baltic Dry Sea Index, the Baltic Dry Index has gone into new low grounds from 2009. So something is amiss out here. I don't know what it is. I don't know if these earnings are being pumped up or whatever it happens to be, but the surprises that are coming in some of these are pretty dramatic. Now, we've had dramatic surprises on the upside with things like Amazon, probably one of the better companies in the world with their marketing that they have, and Netflix, of course, has been a big one. Google was another big one. So we've had some big ones on that side, but now we're starting to see some of them on the negative side. Particularly the IBB has had a great deal of pressure involved in it because of the fact that we've been breaking down so much from that level in the in the IBB. So we want to keep that in mind also. Okay, we got the stocks down just a little bit today. The Dow's down about 20. The S&P's not doing too much, so it's rather quiet in here. We have a question about Apple. I think I have a question about Apple every day in here. I have to start the show with Apple, and we'll just bring this up and we'll let folks take a look at it here for the 15th millionth time. But since you have a question in it, we will bring it up. We did make the ABCD down to the 113.74 level. We've had a little bit of a 3-day rally here in Apple. It's holding its own. It certainly it's going to be interesting what happens here with it, because we've had a 3-day rally here that Monday, Tuesday, Wednesday, Thursday, Friday, and we'll see if the rally is going to help much. Now, the last time we had a rally in Apple was back in July after the market broke down. It rallied for 2 days and then was down for 10 days. That was one of those situations that you have where the market just turns around and boom, it just drops like a rock. So you be really careful with the Apple. Long term, the Apple on the weekly basis has made some, monster patterns on the upside. We pointed these out when Apple was making the highs, way back in May. We had an ABCD structure there. We had a beautiful ABCD structure. We had a triple top at that 133 level, just spot on. And when the market broke down, it stopped so far, right at the 786 of that whole move, almost to the exact penny. It came in at 211.50, and the low on Apple was 112.10. So it was at about 20 cents. So if we get below 111, the next target on Apple will be 86. And if you don't think it can make 86, folks, go back and look at the chart in 2012, because that stock reached 706, and it went from 706 down to 385 over the next 7 months. So it can have some really wild swings. Even with the greatest products in the world, it can have great swings. So those are the things that you want to be, focusing on as you look at some of this stuff each day. That's what we're trying to do here. Okay. All right. One other thing that I wanted to cover here is the Bradley model, because I'm not sure if the Bradley model is going to be correct or not. All I know is that we are looking at a situation where we've been down 7 days in a row in the Dow, and we're looking for a bottom sometime in late September, early October in this. That's longer term. I know for you guys, that's pretty much what we're looking at here to see if this is going to be the case or not. We'll have to allow a little bit of time to see if that's going to be the case. Now, one other thing I wanted to mention here, we've had a question about the gold miners, and if we're going to look at gold miners, we might as well start with Newmont. Folks, I'm so bullish on gold and silver, they should lock me up and throw away the key until about the 13th of September. Hold on here a second. We do have an interesting situation. We've been at the same low in the mining stocks with Newmont for 4 days in a row now, and that could be or could not be a bottom. We'll have to wait and see. But if you wanted to buy Newmont, it's trading at 16.62. You could use a 60-cent stop on it, because if it's wrong, you're going to take out those lows and you'll have to stand aside. I'm not recommending that. I want to wait and see the quality of this rally if we get it, and then we'll see what's going to happen. I do not believe that we're making a major low in gold and silver. All I believe is that we're making some type of a short covering rally low, like we had way back in March, where we rallied $180 an ounce, and we rallied $4 in silver. So that's what I'm looking at. So I think we're looking at some deflationary environment out here. What's causing it overall, I don't know. But you've got oil prices. They're closer to $40 than they are 50, and it doesn't look like there's a lot of hope over there. So it's just very interesting times, as the old Chinese curse is. Say we'll take a little break here. We'll get back and wind everything up for the weekend.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we are going to take a look here at crude oil on a daily chart here. We talked about this first of the week, the fact that it was breaking down below the 786 retracement at 46.40 a barrel. We're now trading at 44.24, making new lows on the week. We are very, very close to the old lows at $42 that we made way back in March. So we're less than 5% away, and some days this thing drops 5% in one day. So don't be surprised if you come in someday and see oil trading below $40 a barrel. It's hard to believe, but that's basically what it's showing. When we went up and had that rally at $61 a barrel, everybody was back talking about $100 a barrel oil, and since that time we've been it's been a one-way Corrigan ever since middle of June, when we broke from 62 down to 44 in the last 6 weeks. That's extreme bearishness, folks, and we're seeing it in gasoline prices, heating oil prices. So that's there's some deflation out there, so just be very, very careful. Remember what I mentioned starting the show. This is a very important Friday, because if we close badly today, the folks that come in, over the weekend are going to look at their stuff and say it's pretty hard to be long this. And then if we happen to, start moving down on Monday, we could be looking at something, quite sinister. And if we do get rallies, there should only be only 2 to 3 day rallies, and that's what you should be looking at if we do get these. If in fact we are bearish, and we're certainly rolling over. I mean, you got lower highs, lower bottoms. I mean, you're below your averages that you look at. So those are all the things. And the advanced decline line, my God, if you want to see something sick, I posted it every day this week, and yesterday was no different. The advanced decline line on stocks just gets worse and worse. Even when it rallies, there's more selling than there is buying. So there's problems out there, boys and girls. So protect yourself. Don't let what happened to me in 1974 happen to you. It was probably my greatest lesson that I ever learned, and paid me much dividends, but the pain that I endured was not much fun. So live every day in an attitude of gratitude, and do something nice for someone who has a lot less than you today.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.